We're going to jump into the charts, but the first thing I want to talk about is what is happening with the Fed. Over the past few days, what have we been talking about? The 200 SMA and then the reaction that we're going to get from the Fed. We need to know the Fed's tone. Once we understand where the Fed is coming from, we can anticipate the next moves in the market. Now, once we started getting bad PPI, CPI, PCE data, what did this tell us? Inflation was an issue, and we knew that the Fed would come out strong against this. This being said, let's go into detail. Now, what have I been saying over the past few days? We need to focus on the Fed members that have voting privileges and rights. You can Google that, very short, very easy to do. You come in, we can see Fed Kashikari. Now, this is the focal point of the video, so we're jumping right into it. First Fed member, and we know he's usually a hawk, but he had a very bullish last meeting that he said. He was like, I'm switching the tone. Maybe inflation's seeing the top. Maybe everything's looking good. Today, everything switched. He's very open-minded about stepping up the next rate battle. He said that he was on the 25 BP hike list before, but now he's open-minded to go back to a 50-point hike right now. We've also seen the Fed Fund Futures pricing in a 5.5 to 5.75 ceiling on Fed Fund Futures, rising once again. So they're anticipating more rates to be coming. This is not surprising. He also was pretty detailed in what's happening right now. He went as far as to say that he does not know. He did not say he doesn't believe we're going to, but he said he doesn't know if we can even achieve a soft landing at this point. His words, not mine. That's the Fed. That's where we're coming from right now. Fed Bostic speaks tomorrow. That will be a little bit more interesting. And then I know Fed Bostic speaks Friday, and then I think Waller speaks tomorrow. So a lot of stuff happening. Unemployment data tomorrow. Also, jumping into the indexes. Again, I have to make today's video short because we have a webinar in the Discord, so I need to jump into that in a second. Now, we're going to go into what's happening here on the charts, what's happening here supply and demand wise. Before we do that, I have to ask you to consider doing two things: like and subscribe. Every single day I make videos for you, so you're prepared. As you can see, we have nonstop videos coming out into what's happening with the market. We've been calling for a drop, and honestly, I think we're just getting started for the past 1.5 weeks, and we've been profiting on that, telling you all the plays along the way. So consider liking, consider subscribing. Back into it. Now, supply clearly around 12.2, 12.25. You've made nothing but lower highs, as you can see, continuously in the downtrend, just lower high, lower high, lower high, lower high. And then on top of that, you have been making lower lows, as you can see as well. Now, up into this point for the past 34 days, you've been making some, higher lows, but now you're pushing back down. What happened today that was interesting? You came back down to the 200 SMA. However, the reaction has been worse than ever so far. Today on the after hours, we do have the Tesla investor meeting, which I think could possibly be trying to hold us up just to a certain extent, maybe some optimism there with Tesla. But I'm gonna tell you right now, I expect a break to occur. Now I need to go to some longer term charts so you can see more information here. As we dig a little bit deeper, you can see possible double bottom happening there, but it's only a double bottom if you break above the neckline there, which is 12.2. So we don't think that's going to happen. This is not a demand level down here. This is just a support. So I'm watching. We start to break below, like I said previously, my 2-3 weeks, to where you very much confirm the bear case is holding below the 200 SMA and making a lower low on higher time frames. Below 8.8, 11.88 on Nasdaq, that's a lower low. Then we'd be looking for a touchdown to around 11.65 roughly, which is the 200 SMA on the weekly. Our next demand level here is not until down to 11.45 to 11.3 roughly on Nasdaq. That's a long ways to go, almost 600 points, give or take. Going into ES futures, what's happening here? You have that 200 SMA, your supply level right there. You do have a demand level down here, down to 39.25 to 3,900. That's your next major point. I'm looking for this to be tested very quickly, very soon. Everything's lined up with what the Fed has said, and I do not believe we have strength to balance at this moment right now. Again, my biggest positions right now, Amazon's been the easiest short ever. I've been telling everyone it's almost no risk for myself. So let's go over those plays right now. Amazon, like I said in yesterday's video, go watch it if you need a little bit of education on what happened there. But you can see lower highs, lower lows, the easiest channel, easiest trade that there is. And what are we looking at? We're looking for that gap fill. We've been calling for this for almost 5 days now to 90.21. But you also have another daily gap fill down here. You're more interested in gap fills on the daily time frame than any other time frame because those are the ones that fill 95% of the time, right? The 5-minute, 2-minute gaps, those don't necessarily have to fill. Daily gaps are more important. That's what you're looking for. Again, very close to target number 1. And then again, I think target number 2 could come very much so in a hurry. We broke below 92. And we started to test some of that liquidity down to lows of 91.5. If you got in today, you could have got in literally this morning from yesterday's video at 94.5, almost $2.5 drop there. Beautiful play. A little bit deeper, Nvidia, this has been probably my favorite play. Again, what are we looking for? And I got a lot of criticism for, one, being transparent, which is kind of crazy. But if we look at what's happening with Nvidia, one, they had an offering yesterday, or the announcement of an offering. But what do we believe right now what's happening with chips? One, we know that technically based on the P/E ratio, Nvidia is overpriced. If we look at the rest of the market, what are we looking for? We're looking for value towards the downside. Over the past basically month, give or take, since January, we've gone from 140 to highs of locally 240. A massive, massive jump, almost 75% of upside in the past month. Very similar to Tesla's chart, which I'm going to go into that in a second. What do we see here? We see opportunity, a very big dip and very big gap, down to 211. That's target number 1, 211 down to 203, 204 roughly. And then after that, we're targeting down to 191. Honestly, I have more than enough time on these contracts, so I'm going to be sitting and holding. I've been accumulating and grabbing more of my position, so I'm sitting very comfortably in the green. Today, what do we hit down to? To lows of 225.13. Under 225, I think we're in pain, but you had every entry signal probably in the book on the day looking at Nvidia, because we came below that key level we've been talking about, 227.5, 227.6. We've rejected 1, 2, 3 2-hour candles, so 6 hours total, and it looks very weak right now. I believe if tomorrow Tesla's investor day comes out bad, we're gonna have more continuation based on what the Fed is gonna be saying. We're gonna have more continuation towards the downside. I'm honestly absolutely in love there. So again, lots of downside here. If you're not in Nvidia, man, it really sucks, because honestly, it's such a good play. I absolutely love it. Last up, and these are just the plays that I'm in, right? I'm just being transparent, right? Now, I will say right now, Tesla's the riskiest play. You've had plenty of opportunities to get out of Tesla since we've talked about it. We've been mentioning going short every single time we come into supply, okay? Every single time. Supply right around 211 to 217. We hit that a day ago. You had an opportunity to get around 211. You dropped all the way down to 198 today. I mean, opportunity after opportunity. So you don't have to sit in these positions, right? Again, I'm never going to tell someone, look, you have to hold all the way to a target. I'm just showing you the plays that I'm looking at. So I've had opportunities to get in, to get out. But again, I have dated contracts, so I'm sitting comfortable right now. If I look to the upside though, unless Elon comes out with an extremely bullish meeting. And again, what do I think he's going to say? I think it's going to be really simple. I think he's going to highlight what's happening with AI and what they're trying to do with their competitor ChatGPT. But what do we know? That's going to take time. So the Cybertruck, maybe, possibly. The last investor meeting last year was not that crazy, I will say. So my expectations aren't extravagant right now, but I'm sitting comfortably in the green on Nvidia and Amazon. So right now I'm I feel like my risk isn't that high with Tesla personally. That's where I'm at right now. I still feel really good. And again, I think the downside is just now setting up. You also have a daily gap all the way down here at 146. Am I saying that's going to get filled? No. So don't quote me on that. But I still do think we have downside opportunity and a lot at that, right? 181 is the ultimate target, but even to 190 and lower. So again, these are my favorite plays right now, what I'm looking at on the broad market. A few of the big things though you need to be watching for. Again, you have not closed below the 200 SMA. I'm looking for the close on it tonight. I want to show you some of the big fundamental indicators. Now, first thing I want to do is show you the 10-year and 30-year. So as you can see right here, these are what you type in on TradingView if you want to look at them. The US 10Y, US 30Y. If you look at the 2-year yield, it's US 02Y. But that's how they're formed there. Now, one thing that we have seen, the US 10-year versus the US 30, this is the inversion chart that I love. You're always going to see me mention. What has happened? The inversion chart, it's kind of crazy. You're an ascending triangle. You want to absolutely explode here. Now, I will say the highest that you've ever been on this inversion chart going back is back here during the .com bubble, and you're getting dangerously close to those levels. At this moment, the inversion chart is worse than the housing bubble right now. And you can see this might be the longest time that we've ranged at the inversion as well. What happened the last time we were inverted here and we got to these higher levels? You have to go all the way back to September, and that's when we had a nasty, nasty decline on the SPY. So if we go back to September, just really quick here, as you can see from the date basically on August 8th all the way until October 17th, nothing but downside. And a lot of that came once you got inverted on September 12th. So again, going back to that chart, what am I talking about? As you come back in here, we can see you started pumping here in August when you started to get inverted. Once you capped out around the end of September, and then you started declining down, and then you really didn't start to see the market recover until you really were settling down here. And that's where we're at now. I think we're at the inflection point where things can start to get crazy. So you need to be prepared there specifically. A lot of people talking about the dollar and what's happening here. You need to understand that the dollar is affected by so many things rather than just the US economy right now because of all the devaluing. That's why I haven't been so heavy on the dollar. Although what I will say is the dollar has a lot of upside still here, possibly to 106 and then all the way up back to 109. Those are the targets you have to be looking at there. But again, the inversion chart's all I'm really watching right now because that gives me and has been such a key indicator over the past few months if you've been here on the channel. Now, last thing I'm talking about is the VIX. VIX, again, everyone is going to keep asking the same questions, so I'm trying to answer them as easily as possible. VIX hasn't been the same since 0DT contracts came to SPY, and so you're not seeing as many option contracts come into SPX. That's what's happening there, and I think that's what's happening with VIX. So right now, it's a new norm, but what I'd be looking for here is getting over 24 to get really excited about the VIX. Over 24, I think you have potential to really shoot up, and that's where you get very bearish. So that's all I'm really watching. Can we get back above 24 here on the VIX? And then once again, the last thing that we're going to talk about is going over the flow. I won't be using Bookmap today, so bear with me. What we're going to be looking at here is specifically what's happening with volume and the biggest contracts on the day. So coming into SPY, definitely a lot of puts coming in here. And when we look at the date, a lot of these puts are close dated. March, a little bit in June, but that's what we're looking at. We like to see those because that's going to show us the short-term aggression there. Going into Qs, what are we seeing here? And I haven't looked at these at all today. Qs, heavily aggressive to the downside, probably the most bearish you've seen in days. Again, not a surprise for me with what I'm seeing. Big things coming in here. A lot of people expecting downside. We look at volume coming in. SPX, largest orders of the day, once again, towards the downside. IWM, I think probably some of the most influential when we look at what's happening with SPY, Qs, etc. IWM showing a risk off mentality, in my opinion. A lot of puts have been flowing in here. And if we look at the IWM chart, what's been happening here, when we look at dated times here specifically, you can see we are making a lot of lower highs essentially since the beginning of February. Arguably one of the worst charts that we've seen here. Really ugly, holding down, disgusting. You could argue like on a daily time frame, maybe it's a bull flag. It looks a little bit more structured than Nasdaq and SPY, but still looks rather disgusting. The last things I want to look at is going to be VIX, and as you can see, a lot of calls coming here, people expecting the volatility. So I think right now what we're expecting is exactly what we're getting. Hold below the 200 MA, that's what we want to see for continuation to the downside. And if we hold below that 200 SMA on the NQ and ES, I expect immense volatility towards the downside, and I expect a very bloody end of the week and beginning of next week. This has basically gone exactly to plan. If you're new on the channel, I recommend following and just looking at some of the previous videos and tune in every single day here to the channel at 10:30 a.m. Central because we're live going over the markets and really educating you guys 100% free. The Discord link is down below, but I believe it's totally filled up right now. So anyways, the best way to get in contact is using Twitter or getting inside those lives to get educated. I want to give as much free content to you as possible, but I got to get out of here. Have a good one.